Right, let's move on next to Spar. And everybody knows this one, headquartered in Durban. It's principally a wholesaler, so it doesn't typically own the stores that it operates because those are owned by franchisees, franchisors. I can never remember who's who. The people that own the stores, right? They have the wholesale relationship selling stuff into those guys. And they additionally have the Tops brand, which is liquor. And they have roughly 300 or thereabout Build-It stores, okay? And that's why we're in this conversation, because Build-Its are indeed those stores which retail building and related equipment, as well as cement, door frames, and all of that sort of thing. A lot of those Spar stores, of course, are in smaller towns and semi-rural and urban areas, which is where a lot of those sales happen. That's a lot of stores, 300. Market cap of this one, 31 billion rand. It's shot up recently, in part because it did an interesting transaction to buy a similar business in Ireland. I'm sure Joseph will have some views on that. Price to earnings ratio 20, so cheaper than Massmart by far. Dividend yield of 3.24%. So this is a retailer which actually did quite poorly 2 or 3 years ago compared to its competitors, but has recently done pretty well.
Certainly, if you were to compare it, it's almost in the same league as Pick n Pay, where for a certain period they were really bad performers and lagging behind the others. So if you compare Spar and Massmart, you're looking dividend yield of 3.24 versus 2.77. The market cap is almost similar, but on a P basis, obviously looks a little bit cheaper than that. So they've done a very good turnaround, and I think if you look in some of the South African retailers, Woolies obviously went into Australia, so they've ventured into Ireland, to try and make sure that they...
And the business in Ireland is very similar as far as I understand. It's a network of stores in Ireland, some stores also in the UK.
Yes.
Interesting purchase because they seem to have bought quite well. The business appeared to have quite a lot of debt and be battling a little bit. And it does now add something different to the group, giving it both developed and developing country assets. I mean,
100%. So from a geographical diversification and also currency. Remember, our rand is really pretty much volatile these days. So giving them hard currency earnings, I think is a plus for them going forward.
Given the level of the pound to the rand, it's like almost 20. Well, let's have a look at that share chart that I'm referring to. It has certainly popped up quite nicely, and that happens tail end of 2014 when the deal comes through. Still moving along quite nicely. New management, Wayne Hook has stepped down, but he's been succeeded. I think his first name is Gavin, his surname is O'Connor. A new CEO, but certainly an experienced hand, somebody who was there before. And Spar continues to remain competitive. I noticed that in some areas like the Rosebank Mall, they're putting a new top-end store in, and they're obviously working with a franchisee there who is keen to go out and take on Woolies at that higher-end organic food and all the rest of it market. So quite a nice, diverse capital equipment, capital efficient type of business model. Right, so now we need to do the hot or not business. How are you facing, or how are you positioning yourself?
I think I'm pretty much like Spar. I think they've gone through a very good turnaround strategy, and I think given obviously the recent weakness in the share price, it does provide an opportunity for buying. So I would put it as a hot.
So a good 2014, but has tailed off a little bit, does look as though it offers value at current levels. So we're going hot on that one. Me too.